Hi, this is Stan Reinford, and welcome to this week's market update for May 27th. Hard to believe June is right around the corner. So, thanks again for all the great compliments. We have a lot of new people that are joining, so we'll jump in and help explain how the charts work. In the meantime, thanks for all the great conversations, great questions, great suggestions. So moving forward, I'm going to be using the 10-year chart here in the center. So we'll get that switched over here to the 10-year, and that way you'll get a better understanding of what we're looking at. But let me explain the charts. To the left here, we have the 30-year Treasury. To the center, we have the 10-year, and then to the right, we have the S&P 500. Down below here, we have the candlesticks. A red candlestick means that interest rates went up a little bit or went sideways. Green means interest rates went down a little bit or went sideways. So I'm showing you the 10-year because that's actually going to be easier, and a couple of suggestions there that I had from people watching this that that would be better to watch. So in this chart, the higher we are in the chart, the higher rates are. When we're at the bottom of the chart towards the 4, their rates are lower. So keep that in mind. So right now, if you look all the way over to the right here, I'm showing the 24-month version here. You'll look and see where we are today, just coming down above, right around the 4.48 there, below that 4.6 resistant line. And then if you look to the far left here, you got to go back to May of 2025 to see where we were at the highest levels here in there. So last week we were actually higher than we were a year ago. So just keep that in mind. A lot of clients are telling me that they're being quoted lower rates from other companies. There's a difference between locking a rate and quoting a rate, and many companies are just quoting rates right now just to get you to, go to their side and not telling you what's really happening in the market. So keep that in mind. So let's talk Fed news. So Kevin Warsh was sworn in on Friday. A lot of people think that he's going to be a superhero and lower rates, and he's probably not going to do that because they expect that he's going to follow what President Trump wants. The numbers aren't showing all of the information that the market is showing or saying, to be able to bring down rates. Like right now, where the 10-year Treasury is. So as we get down lower here, yes, but we got to get oil prices down. Finally, oil went down below $90 a barrel today. That's a good thing. What's really catching the news is what the deal that is supposedly happening with Iran. And supposedly within 30 days, there should be the Strait of Hormuz should be open to pre-war levels. We will have to wait and see. Iran states through media release preliminary details of the Memorandum of Understanding, or MOU, and the U.S. basically is reporting that there's a couple of details that they've gone over. The U.S. would withdraw from the vicinity of Iran. The U.S. Navy will lift its blockade. Iran will restore the flow through the strait to pre-war levels within 30 days. Management and routing of the traffic handled by Iran in cooperation with Oman. And if the final deal is reached within the 60-day agreement, it would be approved in the form of a binding UN Security Council resolution. One key point, though, is that there's no mention of the enriched uranium, which has been highly publicized by the president and many others in the cabinet. We'll have to wait and see what happens, but that's not part of it, so we'll have to wait. In the meantime, though, the markets are reacting as if this is a done deal, so we'll have to wait and see. Let's talk jobs. So ADP released today that their report ending May 9, showing that an average of 36,000 jobs were created over the previous 4 weeks. This is roughly 154,000 jobs in the last full 30 days ending May 9th. ADP says that the labor market is showing that it's bottomed out and that it is starting to accelerate a bit. So we'll have to wait and see. So let's talk housing. So single Gen Z women are outpacing their male counterparts when it comes to home buying. They accounted for 35% of all home buyers in their generation, while single Gen Z men represented 18%, according to a survey from the National Association of Realtors. Remember, these are younger people. They don't have a whole lot of money saved. They're just starting out as their incomes are growing. and they don't have a whole lot of money saved, so they're utilizing a lot of low down payment programs, and they're probably buying homes that are starter homes, not the home that they really want, but a way to get into home ownership to build more wealth in real estate so that they can trade up down the road. Again, there's a lot of great programs out there. If you're in that circumstance or in that age category or any other, give me a call. Be happy to walk through the scenarios with you. PCE, or personal consumption expenditures, which is the Fed's favorite measure of inflation, is being released tomorrow. It is believed that it's going to increase from 3.5 to 3.8. Some believe it's going to even go up further higher than that. We'll have to wait and see. Once oil prices start coming down, that will bring down, or should bring down, inflation, because again, oil prices are tied to everything from delivery, from manufacturing, all types of things here, which has been increasing items over time. So mortgage rates still in the upper sixes. Again, it is a great time to buy. Remember, if you buy today, rates go down in the future. That means more people come back into the market, and that'll be your appreciation instead of you paying more for that home down the road when rates go up, when there's more competition. Remember, we're here to help, whether you're buying or refinancing, whether it is a primary residence, second home, or investment property. We've been helping a lot of clients consolidate debt and helping them save thousands of dollars by doing that. Again, we're here to help. Remember, there's about 15 things that go into calculating an interest rate. So if you're putting more money down or buying a second home or whatever that is, interest rates are going to be different no matter what that is. And again, depending on credit scores and so forth. So please forward and share. I look forward to seeing you next week. Have a great one.